Welcome to the Markets Mindset. Every trader from beginner to pro asks the same question at some point. What's the highest probability trading setup? The setup that feels like a sure thing. The one that gives you confidence every single time. The one that, if you just master it, could change your entire trading journey. And here's the uncomfortable truth. There is no holy grail. There's no pattern, no single signal, no magical combination of indicators that guarantees success. But here's what does exist. Moments in the market where the odds are tilted heavily in your favor. Conditions that, when they come together, create setups with a much higher chance of playing out. These are what professionals look for. They're not searching for perfection. They're searching for probability. And in this video, I'll walk you through exactly what makes up the highest probability trades and how you can start stacking the odds in your favor. Step 1. Context. The foundation of every setup. If there's one mistake most new traders make, it's this. They zoom in too close. They see a candlestick pattern or an EMA touch, and they jump in. But without context, that signal is meaningless. Context is everything. Ask yourself, where is price in relation to higher time frames? Where are we relative to yesterday's high and low? Where is liquidity sitting? Are we in the middle of the range, or pressing against a key level? The highest probability setups always come from alignment. When the higher time frame direction lines up with your lower time frame execution, you're no longer guessing. You're trading with purpose. Step 2. Liquidity. The market's magnet. Every strong move in the market is drawn towards something. And more often than not, it's liquidity. Equal highs, equal lows. Obvious stop-loss clusters, fair value gaps that remain unfilled. These are magnets. Without a liquidity draw, you're blind. With it, you know where the market wants to go. The highest probability setups form when you have a clear target. You're not just buying because the chart looks bullish. You're buying because the market is reaching for liquidity above the highs. Step 3. The break-in structure. Here's where the footprints of smart money become visible. Price doesn't just wander, it builds structure, and then it breaks it. A break-in structure is one of the most powerful signals you can find. Price takes out a key high or low. The market reveals its hand. The story changes. And when you see that break, especially when it aligns with higher time frame context and a liquidity draw, you're staring at the beginning of a high probability move. Step 4. The patient entry. This is the part most traders skip. They see the break, and they chase it. They don't want to miss out. But the highest probability traders know this. Patience is an edge. Instead of chasing the initial breakout, they wait. They let price come back. They let it retest the level. It could be a retest of structure. It could be a touch of the EMA. It could be a return to a fair value gap. That's the entry. Not the emotional breakout, but the patient, controlled, risk-defined entry. Step 5. Risk-defined, reward aligned. This is where probability becomes math. The best setups aren't just about being right. They're about structuring the trade so that when you're right, you win big, and when you're wrong, you lose small. Your stop-loss is not random. It's not emotional. It's placed in a logical area, behind structure, beyond the level that proves your idea wrong, and your target. It's the liquidity pool you identified earlier. That's how you align risk and reward. That's how you create setups that pay you properly when they work. Where traders go wrong, here's the danger. When traders hear high probability, they think guaranteed. So they oversize. They remove the stop. They let greed creep in. But probability doesn't erase risk. It only tilts the scales. Even the cleanest setups will fail. Even the perfect conditions will sometimes collapse. Your job isn't to avoid losses. It's to make sure those losses are small and that your wins are larger. The real highest probability setup. So what's the highest probability setup? Really, it's not a candlestick pattern. It's not an RSI crossover. It's not a magic time of day. It's the combination of context, liquidity, break-in structure, patient entry, and disciplined risk. Stack those together, and you've got a true high probability trade. Final message, stop searching for a holy grail. It doesn't exist. But the ability to stack conditions, to wait for alignment, to trade with discipline, that does exist. And that's what creates your edge. The highest probability setup isn't about being perfect. It's about stacking the odds in your favor, again and again, until consistency is the result. So next time you ask yourself, where's the best trade? Don't look for magic, look for alignment, look for structure, look for patience. That's where probability lives. Thanks for watching. Please like and subscribe.